Joining us is Todd Elmer. He's Citi's head of G10 foreign exchange strategy in Asia, I should say, ex-Japan there. Todd Elmer, thanks very much indeed for joining us. What do you make of what's happening at the moment as we head towards that IMF meeting at the weekend? There really seems to be a lot of posturing going on.
Well, I think that authorities across the globe are trying to stake out their positions ahead of what will be several multilateral meetings over the next several weeks. But we think in general that expectations for some progress in terms of multilateral action are really becoming wildly overblown at this point. You only tend to see action from multilateral groups when the incentives are aligned, but pretty clearly it's in the interests of all countries right now to have a weaker currency.
Yeah, it's this sort of mutually assured devaluation, I think, as one newspaper put it this morning.
Yes, I think, again, that all the countries, generally speaking, would prefer to have a weaker currency. And certainly what we're seeing in the U.S. is that they are prepared to use policy to effectively debase the value of the dollar. And I don't think that their stance is going to change anytime soon, because the typical reasons why they'd be concerned with dollar weakness or the impact of dollar weakness seem to be really distant or weak at this stage. Dollar weakness is not going to feed higher inflation. And it doesn't look to be destabilizing other asset markets. If anything, a weaker dollar has tended to be associated with higher equities.
Right. Well, let's talk about some of the individual currencies, of course, and we have to start off with what's been going on in Europe with Wen Jiabao's visit there and hitting back and rebuking the Europeans for also putting pressure on them. They're not going to be moved, are they? Or at least not going to be moved when the pressure is seemingly on them.
Well, I don't think that the European or the U.S. pressure, for that matter, has kind of really had much of an impact recently in terms of accelerating moves from Asian authorities. I think, again, really what we're seeing right now is that they're just staking out their positions ahead of these meetings, and that if the market begins to price in some sort of impact or some sort of multilateral agreement on exchange rates, I think they're going to be disappointed. I think we're simply going to see a reiteration of the typical G7, G20 line that we have to see accelerated adjustment of international imbalances. And I think what that's going to serve to do is it's going to reinforce downward pressure on the dollar, and the euro is going to continue to bear the brunt of that adjustment.
Yeah, let's move to the yen now. 15-year highs against the dollar. Is it just a situation that's all down to the weakness of the dollar rather than any underlying strength there for the Japanese currency?
Yeah, I think primarily that the weakening that we're seeing in dollar-yen does reflect the drift from the Fed towards additional easing. But we think that this is a place where the market probably remains a bit too complacent on the potential for a bit of at least short-term relief from the dollar. We think that the timing of the Bank of Japan's move to introduce additional easing is interesting in that it should help to defray some of the external criticism of their policy at these upcoming meetings, because they are going to be able to argue now that the moves in the yen are not reflective of underlying fundamentals. Since we don't think that Japan is going to really be the focus.
Thanks. Todd, we're out of time. Thank you so much for joining us. Todd Elmer there from Citigroup.